There we go. Recording is started, by the way, for anyone in the audience. And no, I am not recording your messages. So if you want to go crazy in there, that's up to you. I'll just start off by introducing myself because I'm guessing a lot of you guys don't know me. My name's Oliver. I'm a 20-year-old futures trader, more specifically, only the indices futures. So if I go even more in depth, I only trade NASDAQ. I trade ES very rarely when we are in conditions like Toodegrees just mentioned as NASCrack. So when NASDAQ is on crack, I go to ES for a little slower of a move. Very simple. I have exactly that, a very simple approach to my trading. I like to study as an analyst, but when I'm a trader, I put on the other hat and I like a simplistic approach to price. So bringing all of these complex concepts we have as ICT traders and trying to have a simple approach to take a few steps away from the decision process. And that is something that was needed for me as I had a lot of issues with overtrading when I started off, which was about 2 years ago. So started off in crypto NFTs, moved to Forex until my Forex funds crashed. If you were part of that, I feel your pain. And moved to futures after that and never going back. Definitely the best place to be, in my personal opinion. So that's me. And today we'll be going at it very simply. I'm not here to share the biggest sauce. I'm here to showcase, while giving you guys a review of what happened today, how I interact with price and how I utilize Toodegrees tools to give me an insight into that. Like the simplest of logic, right? I'm on this very simple layout right here, which is my number one go-to layout. I have ES on the right, NASDAQ on the left. You'll see weekly and monthly power of three and ranges. People forget, but to the most basic of forms, all ICT traders trade power of three. I think you guys can probably agree with me with this statement, I guess, that we all trade power of three. We're all looking for a specific sequence and price of AMD, open, high, low, close, open, low, high, close. And that's how you can define every single one of my trades. I'm looking to catch a piece of the daily expansion. So always trying to trade with a daily bias in mind. And that's how I filter trades. I'm going to...
Real quick.
Oh, yes. Go
I
for
want
it.
to make sure if anyone is not familiar with Power of Three, drop a 1 in the chat if you're not familiar.
It would be my pleasure to walk you guys through it. Definitely.
Exactly. So let's give it a few seconds. Okay, we got 1, 2, 3. So just give it a quick intro to Power of Three if you can.
Perfect. Well, you know what? Let's get right into it. I'll make some room right here and give you guys a drawing because I don't know about you guys, but for me, it's all very easy when you can visualize it, right? For me, I have a little bit of a different approach. A lot of people for Power of Three, they think only AMD, at least the widely knowledge of that is AMD, so accumulation, manipulation, distribution. But I look as Power of Three as three different things. So first off, there is AMD. So let's make a quick little drawing here. And let's try and keep it simple. When you're talking about AMD, you're thinking about the logic behind SMC, smart money concepts. So you're thinking about how institutions will be accumulating orders. Why? Because they have big position sizes, right? To the bare bones of it, they have huge position sizes, and it takes time to place huge positions, right? And as I said, I'm going to try and keep it very simple. After accumulating orders, engineering liquidity, like a lot of people like to call it, I love that term, you need to manipulate. Why? Because you need to take a run on this liquidity. You need to take out these opposite levels to then be able to fill those orders. So if smart money, what we're calling institutions and market makers, big players in this game, want to go long, well, they first need to place these long orders, generate that liquidity, then do a fake move, which we will call manipulation, before distributing, which you will call your real move. What I also like to call just it is going to be the biggest move 95% of the time, and that is a bullshit stat thrown around, but the majority of the time it will also be the biggest move. So when we're talking about AMD, you're looking for an accumulation of orders followed by a fake move, manipulation, and then distribution. That is step one in Power of Three for me. Then it's all about the order of things. So if I'm looking for a bullish candle, I'm looking for a specific sequence of course, the candle will open. I want it to then go make a low, to then go for a high, and then, of course, retrace to a close. This is what we call open, low, high, close. Vice versa, if I just flip this around to help you guys visualize, if we're looking for bearish, I'll be looking for an open, high, low, retrace to a close. So it's the specific sequence of it. And then lastly, you would use the opening price to justify premium and discount levels. So I like to use both the daily open and the midnight opening price, as you'll see right here. So you use these levels to help you visualize what we just looked at right here of Power of Three. Does this make sense? Or perhaps Josh or Tu, you'd like to add something to that explanation?
It's pretty clear and straightforward. The only thing that I may add is that this concept is fractal, and the way that ICT introduces it is that he learned this concept from Larry Williams, which he considers his mentor. The idea is that what Ollie is describing is true for any candle. So if a candle is engineered to be bullish, the manipulation is going to be the bottom wick. Is true if a candle is engineered to be bearish, the manipulation is going to be the top wick. So Larry Williams makes the analogy of a phone book to say that he would like to know where the people that short the wicks of bearish candles and long the wicks of bullish candles live. And he says that likely they're going to be all the same people in the same area. That idea is to basically say those wicks is the point of the Power of Three where we want to get in. So that red box that Ollie just drew, that is valuable for any candle on the chart. Whether it is a monthly candle, a daily candle, a weekly candle, a 4-hour candle, is the same thing. So exactly, that's perfect. So
I'm making a quick draw.
Power of Three indicator, that's why it's powerful. Because while being in a lower time frame environment, you can honor the higher time frame candle by defining where this wick is being formed, so that you can get into the wick of the bullish candle if, as Ollie says, you have a bullish bias. So you're more inclined to think that there's going to be a bullish move rather than a bearish move. Is true.
Definitely. And just to help you guys visualize once again, I made a beautiful drawing right next to it. This is what he meant, right? You're opening at a certain price, and this is not up to scale, for example. But if I'm expecting a bullish candle, anything below the open will be framed as manipulation. That's where Joshua's indicator comes in, right? I don't have it on this specific framework, but looking at average distribution and manipulation levels, that is one saucy indicator. What's up, Joshua? I didn't see you in there, but perfect timing. So yes, I was going to talk about that video, actually. Thank you, too, for putting that in. But great video by ICT when he talks about his Forex open high, low close, open low high close with AMD. That's definitely one to study. And there's also a wonderful one in the 2022 mentorship talking about, once again, Power of Three from a daily perspective. And that's how I mainly use it. And as Tu just said, it is fractal, right? I can use it on a daily candle, just like a 6-month candle, just like every single 1-minute candle. I'm looking for open high, open low whenever I'm taking a trade. So very simple logic that can be fractalized to any single candle you see. Personally, as I said, I like to concentrate on the daily expansion and my daily levels. So I utilize, you can see my levels. I didn't want to remove them. Those were my levels from this weekly outlook that I did, and just in general from yesterday. I was looking at a very simple thing of a retracement into CPI that will, Alex from the lab actually put it very nicely, wake up and buy NQ, right? When I see price moving down like this, and that our first high impact news of the week, which I utilize quite a bit for news, I tend to only want to engage on days where there are high impact news. I have some specific rules to it. I did a thread, perhaps I'll link it in here afterwards. But I engage with news very conservatively. I try to focus on the highest probability of days, and that leads me to only be trading high impact news events. as you said, wharf rate, definitely manipulation or distribution. And since I saw price moving lower early on in the week, I framed this as manipulation, and my news being CPI, which often runs on side with price, which means, for example, as you framed it, wharf rate often is related to distribution. I was looking for long. So purely based on news, that gave me my bias for the specific day today. But if we look at the levels, it's pretty simple. Most recent range that I have on both assets, for example, if I plot it up, this is the same range, by the way. If I have my crosshair here, you'll see we're looking at the same range on both assets. Just as you can see, NASDAQ has been very aggressive to the upside recently. Due to that, what can I spot? Well, NASDAQ is stronger. Like clearly we can tell that NASDAQ is stronger in this case, of course, with hindsight, but just looking at the previous price action, you can see how aggressively we closed through previous candle levels, right? Compared to ES here, which we barely closed through them or do not close through them at all right up until Wednesday of last week. Due to that, I don't anticipate that NASDAQ will need to retrace to a discount. In this case, I really only look at the first inefficiency. What's up, Alex? Nice to have you in here. But if I'm looking at the weaker asset, I want it to start going to a discount. And that comes to how I utilize higher time frame arrays. I'm only interested in premium and discount arrays. So in this case, if I'm bullish, I will be interested in the first discount array. In this case, it's the only one pretty much, unless you want to consider this new week opening gap, this previous new week opening gap. But I see this order block, and this is the only level I have on my daily chart. If I go to NASDAQ, I have this first discount inefficiency once again, and let's just put it on the right color. But as I stated, since NASDAQ is so much more bullish, it does not need to reach that level. Also, for additional confluence to tell you that, okay, well, Tuesday, we know that's one of the highest probability of forming the low of week. But how can I gain an additional confluence? For me, it's time with SMT plus liquidity. That frames all of my ideas. So right here, we have internal range liquidity. What is your time when you're on a daily chart? For me, that's day of week, right? So I have my day of the week right here. Tuesday, I know that is high probability of forming the low of the week. And then I need SMT. Of course, on this chart, you don't see any recent swing points here that we took out. How can you frame SMT? Well, candle to candle. You've probably seen a lot of people discussing this, but what is that truly, right? If we look at this, I can see that there is SMT because there is candle to candle SMT, but that's just lower time frame SMT, right? If I go to something like an hourly chart, I'll find a swing point somewhere that I can utilize to frame SMT. So whenever you see these candle to candle SMTs, there is SMT. And for me, it's not important in which time frame it is. It's really just important for me that there is the presence of divergence, there is the presence of SMT. All of that combined, right? I like to bring you guys along through my process. Whenever I do reviews like this, I think it's pretty important to bring you guys along why you think something instead of just how I traded it, for example. But due to that, you can see very clearly NASDAQ is very bullish. You have confirmation that inside this liquidity, confirmed through SMT, and you add your time here, that gives me a very high probability that Tuesday will form the low of the week. And as I said, that's my whole logic. I look at liquidity at a specific time and use SMT to confirm my ideas. I'll dive down into the lower time frames so that we can see how I utilize this higher time frame understanding, this higher time frame bias to get a trade idea. But before, I do want to present my model very quickly because yes, I limit myself to one way of executing on trades. And that is not because it is the best way. It is not because it is the highest probability way necessarily. It is because it's the easiest and most consistent for me. Right? Josh always says this, and this always hits me, but you have to adjust your model to your personality. For me, that model is all about breaker blocks, because once you get to that breaker block, I have a mechanical way to establish my stop loss. I have a straightforward entry, and I never miss them. because I always have time to enter on my trades. I have time to notice the breaker block. So from a personal perspective, that's the easiest way for me to trade any given move, and gives me a very consistent way of executing on moves, because when these breaker blocks don't form, I'm not taking trades. And through my backtesting, I've learned that that's higher probability for my specific model. So Ollie is the reason I got stopped out of my shorts. I'm sorry, brother. I'm sorry. Definitely the reason. Small position. I don't think my 2 contracts affected you that much, but definitely. So as you can see, just from these very simple drawings, I look for an intermediate time frame premium and discount. So just my recent expansion moves. I'm looking for my breaker block to form within a higher time frame point of interest, which in this case, right, if we see ES to the right, bullish order block, we had our bullish fair value gap on NASDAQ. And then I look to take the first unicorn entry it gives me. I have a low hanging fruit, which utilizes the same logic I just discussed of looking at the first premium and discount in efficiency. Depending on if I'm going long, I'll look at a premium. If I'm going short, I'll look at a discount. That is my low hanging fruit objective, my partial, and then I have, of course, a final objective, my draw on liquidity. I did draw this in TradingView. It took me a while. I am very proud of these pictures, Cold Brew. Definitely something. But enough about pictures and talking. Let's go look at price more on a how can I trade it perspective. First off, as you can see, I have a bunch of time frames here. The only ones I use are the daily, then I go down to 15, then the 1 minute. I have very specific rules for what time frames am I to use. When I do long-term analysis, I like to go down my whole list, so 6 month, 3 months, monthly, weekly. But when I'm trading, I get a bias from the daily. If the daily is consolidating, for example here, right, you see these candles going back and forth. I go down to the 4 hour to get a clearer picture. Only time I go down to the 4 hour. 1 hour is when I'm studying my weekly profile. Sorry for a second, guys. Being a little sick here, so my voice is killing me. I apologize for that. Gonna drink some water very quickly.
Because
Yes, sir. Yes, sir. So yeah, as I said, 1 hour for me is all about looking at the weekly candle development. That's why I have the power of 3 right here. I love this weekly right here, monthly. This is actually daily in this case. I'll share this layout if you guys want. I really just have the power of 3 set up to only show it in specific time frames. So here I see the daily and the weekly because I'm in the 1 hour chart. And when I'm on the daily, I see weekly and monthly. Definitely something I could show it. When do you know what the weekly profile is? Well, you missed the first part, Cold Brew, talking about how we use SMT, liquidity, and time to get a high probable extreme of the week. Definitely something. But this is all being recorded. So if you want to revisit it once we get there, definitely something. Smart meat tacos. Lovely, lovely comment. So I then go down to the 15 minute. That's what I like to call my intraday time frame. And let's say I remove this for a second. Let's hide these opening prices. Why do I go down to the 15 minute? And why do I call it my intraday time frame? Well, it's very simple. That is the easiest time frame for me to look at price and be able to frame that power of 3 we were talking about at the beginning. So the daily candle development, as ICT says, everything becomes clear when you go down to a 15 minute, right? It is the clearest chart. Take notes, don't be a goose. Listen to Cold Brew. He's speaking facts there. So if I bring these opening prices very quickly, looking at the daily open and the midnight open, as I said, these are both prices that I utilize from a power of 3 perspective, right? And let's remove this. There we go. I'm looking at this. What do I see? Well, we barely traded below midnight open, and we consolidated below daily open. But what am I looking for? I'm within my higher time frame point of interest, right? This is my daily fair value gap that I'm expecting we will expand off of. And honestly, it was the best day to choose because that's what happened textbook today. And as we say, NASDAQ just ran, right? It was wake up and buy in queue, definitely. But looking at this higher time frame and efficiency, all I need is then time and SMT. So for time, what am I looking for? Well, London session, very high probability of forming the low of day, forming one of the extremes. 2 to 5 a.m., I'm looking at this as my London kill zone. That is based on ICT, one setup for life. These are the only sessions I utilize. But we have another aspect of time in the day, and that is CPI. We have 8:30 news in this case. So if we know that news will be linked to accumulation distribution, but will just be a big injection of liquidity, then I'm looking for manipulation at that time, confirmed through SMT, and then I have all my levels. So I have a liquidity run, right? Because it's going to take liquidity on either of these assets for it to form SMT. Then I'm going to be, I am already at a specific time. I have my high impact news event. And following that, I have SMT to confirm it, which gives me everything I need to frame a trade idea. Once I have all of these together, I can then just look for trades. And of course, with the initial weekly price action, we had some very clean levels to be targeting. If you're looking at this, this is liquidity depth by Toodegrees, of course. And I only use the 10 setting. And for ES, I associate that with 2 handles. I like to look at them as a 5-to-1 rather than a 3-to-1 or 4-to-1. And currently, it plots previous day high and previous day low levels. It just helps me visualize SMT at previous day high, previous day low. And yes, only 10 curl bureau. All right, this is my previous day high, previous day low. I'm not using those 20, 40, 81s, 276 levels, all right? I am keeping it simple. That's how I like things to be, because once, I don't know about you guys, all right? But once there are too many moving parts, for me personally, I get confused and I mess up. And I used to do that quite a bit. It actually took me 3 to 4 months before I stopped being just break even and started at consistently making money after coming to that aha moment where I could actually trade. So risk management is a total different beast. And for me, keeping things simple helps me to focus on that risk management. Pretty hard to notice here that there is SMT on this 15-minute chart, because as you can see on both assets, we did not take out that 730 swing. And I'm looking at local SMT, right? Because we already have higher time frame SMT. So my SMT parameter has already been reached. I don't need more SMT, but I like to see recent SMT, local SMT, more specifically, precisely at the time of the news. So I will remove this higher time frame PDRA just so we don't get too colorful on both assets. Let's remove the drawings here, and you'll see right at this news, right at 8:30, you have SMT. All right, if we zoom in just so we can see a little better, right here, you'll notice that ES, did not reach that level. Actually, I thought there was SMT right there, but you have, sorry for that, equal lows right here that ES went to take out. And if we look at those same levels on NQ, right, you're looking at these swing points, they were not taken out, which means you had SMT right on the news. Once again, same logic. Element of time, stop run, confirm through SMT. Now, this gives me all the confidence that this will not be broken. And when I'm saying will not be broken, I'm looking at the entire New York session. And that includes the AM session prioritizedly, because we can have intraday reversals. But if we take into consideration what we looked at on the daily chart, with the initial weekly development being manipulation, I now expect distribution, which is why going into the following days, I'm going to keep going long, and every short that I take will be a retracement. This is just same logic once again, but you can bring it to a bunch of levels. And as Toodegrees said when we started this call, it is all fractal, right? So that same logic I utilize, it is fractal. I can use it on any time frame, but I need it to adjust to time, right? So if I see a daily distribution, this SMT tells me that this low won't be hit for the current session, but perhaps it will be hit tomorrow. Perhaps it will be hit the day after. But this fractal moment tells me that I can now look for long. Personally, I don't like to trade pre-market. So I'm always waiting for 9:30. You have 9:30 right here. What do we know we want to see at 9:30? And I'm going to give you guys a chance here to answer that. What do we want to see at equities open on our indices futures? Fake out manipulation. Beautiful. Time-based manipulation, I like to call that a Judas swing, right? I like to use ICT's terms, give props to the OG, right? But yes, you're looking for stop run, you're looking for manipulation, you're looking for anything, however you want to name it, right? Truth is, you're looking for fake move. When it's time-based manipulation, I like to call it a Judas swing. In this case, did you have a Judas swing? Yes, right? Right on open, we went in the opposite direction you were expecting. And once again, we went the long way. But this is a top-down analysis justifying why I'm looking for longs. Now I'm looking for a very specific framework. Fake move at a specific time, once again, confirmed through SMT. And we actually had a repetition by having ES take out equal levels once again, while NASDAQ did not. So definitely very nice there. Same logic, SMT, E time gives me my confirmation for framework. But what does it also tell me? Do you watch this as the market is printing? Yes, I do. Yes, I do. I'll actually show you guys very quickly. This is a layout that I think Toodegrees gave me probably 7 months ago, right? I was looking to redo my whole trading layout, and he gave me his, and I, of course, modified it to my specific needs. But this is what it looks like. I have my big execution chart. I have which currently, by the way, I'm trading on NinjaTrader at the moment, trying to adjust to that, which I hate, but personal accounts are always on TradingView. I have my 15-minute here, hourly with Power of 3 Pro Plus showcasing the 4-hour price action. I have ES here for whenever I want to look at SMT. It's easy for me to see NASDAQ and ES. And I have 5-minute, which, as you guys will know in a few seconds, is how I establish take profits. So there is definitely a lot there. Oh, awesome. You had the base. So yeah, definitely look in chat right now too. Just sent the exact layout that he sent me a few months ago where I arrived to this. The only thing I really changed is right here he had the news, I believe, and I just put on ES to see my SMT. Might have changed a few time frames around. Unsure. It's been a while. Yes, he does fix a lot of us. I had an ugly 3-chart layout, and now I have all the information I need in one chart. And currently, I'm not full screen, but I have widescreen, so this looks a little bit better when I am. I don't want to mess up the stream, so I'm not going to go full screen here. I'm in a 1080p aspect ratio so that you guys, when looking back at the recording, will be able to have a nice video. Thank you, Colbert, for telling me that. Definitely not. Definitely a clean set. But just to get back into it, as we said, right, time-based manipulation confirmed through SMT. And as you guys saw from the previous pictures, which I can bring back if anybody wants, I'm looking for a breaker block. Now, why is this a breaker block? Well, as we know, when there is SMT, if ES took this level out, I can treat NASDAQ as if it took this level out. It is that simple, that brain dead. This might be, from a purely mechanical standpoint, this might be more of a lower time frame breaker, right? If you're truly looking from a swing point to a swing point, this is a little hard to notice, but we just have to focus on the symmetry of things. So let's look at the symmetry, right? When I say symmetry, I mean the movement. So if I focus on the movement, we went up here, we went down here, then it went up here. This is the movement. This is the movement the open, high, low, and close of the candles tell me. So from this, if there is SMT, where was it? If there is SMT here, then what does this mean? It means that ES took this out. And if ES took this out, I can treat NASDAQ as if it did. And so this is a breaker range. And the last up close candle within that range is a breaker block. Now, does this make sense? Because it's not the best example to be showcasing this very specific logic, but the bare bones of it is when ES takes out a level or when NASDAQ does, right, vice versa, I treat the other one as if it did. And because of that, I view this as a breaker block and can then take standard deviations if I can move it here. And it's probably easier to visualize on a 30-second chart. If you see right here, right, you'll see this move higher, then we went lower, then we went back higher. This is what I just drew, right? Definitely looking, and I like my breaker block standard deviations. Now, a lot of people don't, and I get why, all right? Because they're smaller, and I'm never looking for a reversal when I'm looking at it. Those people are wrong. All right, cold brew. All right. I like breaker block standard deviations, all right? I did a study a while back, and of course they are higher probability because they are lower, but when going in depth about it, I definitely saw some cool stuff, and I prefer utilizing breaker block standard deviations when I'm looking for an objective. That's unfortunate, Rusty. Very unfortunate. Looking at this breaker block, just to get back into it before I run off course too much, I'm looking for an overlapping PD array. Now, overlapping does not mean overlapping, all right? When I say overlapping, I mean in close proximity. If you want actual numbers on NASDAQ, I look at 5 handles. So if it is overlapping or in proximity by 5 handles to my specific breaker block, so I'm looking at only one candle and drawing the whole candle, not just the body. I include the wicks. I'm looking at 5 handles here and 1 handle on ES. As I said, I use a 5-to-1 ratio when looking at it. From this, I have my unicorn, I have my breaker block, I have my time-based manipulation, which gives me the whole framework I need. From this point on, this is my entry. I'm entering on this trade. And as I said previously, I like to use these breakers and unicorns because I had, let's just see here. The breaker was formed when we traded above here. So I had 1, 2, 3, 4, 5, 6, 7 minutes to fully understand my setup and place a limit order here before taking the trade. Personally, I hate limit orders because I have PTSD of not getting filled at my exact level. So I'll just mark it in at that point. But I've had 7 minutes to analyze my setup, make sure it follows all my rules, make sure it is a perfect setup rate, A+. And then, yeah, I probably clicked the wrong button. That happens quite a bit when I trade, actually. So that's quite funny. And yes, the stop is not that wide. I am a big believer in, well, here, I'll bring actually the full logic. For me, in this very specific case, my stop would be here, all right? And that's just through experience. That's just through seeing that I don't want to see this area revisited if we are to continue higher. That's through experience. But whenever people are starting off and coming to me for advice or I'm getting stopped out on every trade, whatever, I just give them the most basic logic, which I actually learned on the first Shotgun Saturday space that I listened in from my CT. And that space has given me so much. It told me exactly when and how to scale in and out of positions, and that's actually what made me the most profitable. But the second thing that I learned right there is the 3 PD array stop loss rule. Now, it is a mechanical way to establish a stop loss, and I've found that it is the most consistent, all right? Which means you won't always have the best stop loss, definitely. And yes, Cold Brew, that Shotgun Saturday was beautiful. I've been trying to find it because I'm pretty sure it was recorded and wasn't smart enough to record it back then. So if someone can find it, by the way, definitely tag me because I want to listen back on that. But the 3 PD array stop loss rule is very simple. I'm going to use 3 PD arrays to allow for their invalidation before getting stopped out of my trade. So in this case, if my entry is on this fair value gap, and by the way, I only use fair value gap and order blocks when making that calculation, right? That count of 3 PD arrays and inverse fair value gaps, of course. So looking at this, I see my entry PD array as my first, then bare bones, right? Not thinking too much into it. Is this an opposite close candle before? Well, is this a down close candle before an up close candle that closed through it? Yes, this is an order block. And then you have a bigger order block. So my stop would be here, actually. As I said, 3 PD array stop loss rule will not give you the best stop. Through my experience, I know that this is the best stop for me, right? Because if it trades past this order block, I don't want to be in this trade anymore. But in this case, my stop loss would be here. Why? It is the mechanical approach. It will always give you a good stop loss. Not always the best. Oftentimes, actually, it is really, really on point. I'm telling you, this is definitely something I recommend for anyone to backtest, especially if you're trading unicorns. 3PD array stop loss rule is some huge sauce, and hopefully someone will find that trading space with ICT. It's probably on Spotify. I just saw what you said, Algo. Probably on Spotify. I just need to look back at what time it was. I have a faint memory that it was actually on my birthday. So it might have been February 6th, 2024, maybe 2023. I'm going to need to get back into it, definitely. Also, once I have my entry, I have my stop loss, I have a mechanical way to look at take profits. Of course, you have breaker block standard deviations, which are an easy way, but I like to use the 5-minute. Now, on days where it's trending like this and the price action from the left is very old, that's when I'll go to my intraday time frame. Now, what am I looking for? Previous range, which is the current weekly range. I'm looking at the opposite range, right? So if I'm expecting a move to the upside, and that's where you'll see the market maker models come in. If I'm expecting a move to the upside, then I'm going to be looking at the range to the left, that is to the downside, so that I can have high probability retracement objectives. That's what I'm looking for. In this case, my high probability retracement objective of this range would be the first premium inefficiency. I'm still in too low of a time frame because I see too much information. This is a 2-day long range. Multiple days, I'm going to look at the 1 hour. 1 hour, what is my first premium inefficiency? It is this liquidity. As we know, though, you can see it from the standard deviations. We pretty much took it out right on the trade. But that would be my partial objective, as we saw from the earlier pictures where I was sharing my model. By the way, no setup, no trade. I love that GIF. I'm a big Dragon Ball fan, so I really do appreciate it. And thank you for the kind comments, guys. I'm trying to keep up with chat. If I missed your question, send it again. It's nothing personal. I probably just missed it. And yes, Peacock, it is actually being recorded. It will be posted on my YouTube channel, I believe, unless Toodegrees has something special for it. And I believe I can send the link in here after, and you guys will add it directly.
Yeah, correct. You'll post it on yours.
Awesome. Itzago, stop looking through all of them. I'll find which space it is specifically. All right, I'll take that time. I've just been procrastinating, definitely. But I'll take the time, find their space. Definitely something. And Vishiro, I'll link it in here at the end, but it's just all E-Trades. You can find also my links directly by clicking on my profile if you prefer. But as I said, first premium inefficiency, that's going to be my retracement objective. So if price is to reverse from this point on, I believe that it's going to return to my first premium inefficiency. I could also go to a 4-hour here actually, and it will give you the same level. A very large amount of time within the year, 2 days. So definitely a lot to choose from. And if we go back to the 1 minute and go back to look at our setup, you'll notice actually it got taken out just before my entry. Yeah, just before the entry. So in this case, it would be a lower probability setup. What I would say is it is no longer an A+ setup since my partial has already been taken. My retracement objective has already been taken, but it would still be an A setup. So I have A+, A-. I use those rankings for my setup, and I am allowed to trade A and A+, and I'm also allowed to trade A- with half risk. So I'm a big believer in just adjusting risk when a setup is not clean to you, because you should not skip setups from your model, but you'll still be happy if you take it half risk and get a return from it, even though if the return is smaller. But in this case, very simple. You could take profit, for example, at 4 standard deviations, or even beforehand, right? Take profit right here, right? 2 to 2.5, you're at 1.3 R. I wouldn't mind taking a contract off there. Might as well be safe and pay the trader, as Colbrew just said. But for me, I'm never looking to take profit before 2R, right? So 2.6R aligning with 4 standard deviations, and especially in relation to time, right? Just at New York Open, pretty much. I'm going to expect a lot of volatility, at least until 950 to 1010 macro. And then, of course, you have your final objective, which will be what is currently all-time high, right? If we just go back to the 15 so we can see this, all-time high would be final objective. And for me, final objective doesn't mean take out my trade. I always want to have a runner in there, especially on CPI, where I oftentimes look for a trending day. Which asset you favor when SMT is present? I talked to, not really, but here. In this case, I would favor NQ, right? Because it's the stronger asset. But the truth is, even when ES is stronger and I'm looking for a long, I'm still trading NASDAQ. I've just noticed that it gives me better risk to reward. So it's all about the risk to reward and the fact that even if NASDAQ doesn't reach that full objective, in the case, for example, that it was weaker and ES took it, then in that case, I'm going to be looking to trade NASDAQ nonetheless because it's going to offer more risk to reward. What I like to do, though, is, as I said initially, right, if ES takes out that level that I'm looking for, I'm going to take profit on NASDAQ. So if ES took out, well, we took it out very much earlier. So in that case, it's just about NASDAQ being NASDAQ. So just pumping really aggressively from that CPI and being at all-time highs, right? Just expanding through bullish liquidity since we are bullish. But if I would see ES take out the level I'm looking for, take profit on NASDAQ, then I would take profit on NASDAQ just like if it did hit that level. Does that make any sense, or does that bring up any more questions? All right, I'm not seeing any answers, so I'm going to take that as it is pretty clear. Took the opportunity to drink a little. By the way, my voice is not usually this deep, and for the people on my Discord, I see a million here, you'll know, as a 20-year-old, there are a lot of voice cracks, all right? So I just want to say that I'm thankful that today I'm sick, so my voice is deeper and no voice cracks. Very nice to see. Looking at this, as I said, this is never my final objective. My final take profit. Final objective means that I want to have at least 75% of my position taken off this trade. And from that point on, I'm just going break even and holding, right? Today, I'm not going to lie to you guys, I did not hold, right? I was fully out at this point in time. As I said, I'm feeling sick, and truth is, I'm taking about 2 naps a day where I usually sleep 5 hours a day. So I wanted to go to sleep, and I took a nap before this call. So definitely something there. I know cold brew. Put a stop on, be there, just be happy. Yes, but this gave me my target a day, because I do have a target a day. If I reached 3,000 on an account on a day, I'm never going to be happy with more. So the difference between making 3K and 5K, I'm not going to be more happy there. So 3K, I'm happy with that point. And I'm just a beginning trader, guys, right? And for me, that beginning trader is 2 years out there. So I'm just trying to be safe due to the fact that I know myself. I know I had a tendency to overtrade. I know I was always greedy because I would always put low risk and then try to hold on. I was a big believer of that one contract and just hold until you're either fully right or fully wrong. But definitely not something I do anymore. I recommend people just go to micros at that point and partial out. I'm a trader that allow first the lows or highs to be formed to then trade the continuations based on down close or up close candle ranges to add position. My question is, will lower time frame IRL VERL will serve as a point of interest? Yes, but in very specific cases. You bring up a good point, Laundress. I hope I'm saying your name correctly. But the only times I look for intraday points of interest, which for me, as I said, intraday time frame is 15 minutes, is when I'm looking for time-based retracements. Thank you, Anar. It has been hard to build up that discipline. And I'm not there yet fully. I'm still making a lot of mistakes, but slowly but surely, I'm becoming the best trader I can be. As I was saying, I'm looking for time-based retracements. That's when I'll use these higher time frame, these intermediate time frame points of interest. What do I mean by time-based retracements? I mean hourly candle power of 3. So for example, if I'm looking at the 1050 to 1110 macro, which as ICT says, this macro will oftentimes pull against profitable AM traders. How I like to say it is it will reverse the most recent move the majority of the time. As you can see here, you had SMT, you were within a 15-minute fair value gap on NASDAQ, and once again, you see candle SMT, right? The fact that ES has not traded back below this candle, this is just lower time frame SMT, right? Here, I'll display it because I'm saying here, look here, look here. I'm going to give you guys a visual aid here. So definitely something there that is pretty nice. But I can look for continuation opportunities as long as my final objective has not been reached. And I'm looking for time-based retracement. So for example, as I said, the macro, the hourly power of 3. So I'm looking at that. As you can see, I have it right here somewhere. Where is my 11 a.m. open? Well, I thought I had it, but turns out I don't. So let's actually set it up very quickly. 11 a.m. opening price. You can see it right here. So looking for an open low, which in this case, actually, we had an open high and we just continued expanding. So would that have been a trade for me? Or the other possible way is that, well, what do we know sessions do, right? If the AM expands, I'm looking for lunch to retrace and PM to continue. That is the most bare bones, basic trending day profile, right? So when I see lunch retrace into here, and I'm looking for a lunch rate, which is a framework, is early or late, do you disregard? If SMT is early or late, no, I do not at all. And thank you for your kind words on the key times. But no, I don't really care for when SMT is present, but I'm looking for it to be confirmed at a certain point in time. So see it like a race, right? Whenever you have a race, you have that countdown with the lights, right? I don't know if anyone is visualizing this, or just whenever you're stopped at a red light, right? When you're stopped at a red light, you're waiting for the green light. When I'm looking for a trade, I'm waiting for the green light. SMT time gives me my green light. So I'm looking for a manipulation at a specific time. SMT confirms that my idea is valid. That's the only way I really look at SMT. And of course, once again, just looking at establishing breakers and stuff and strength analysis, right? So I know that in this case, ES is supposed to be stronger to the upside for this move. I will create a baseline for lower time frame point of interest mitigation. I'm glad I could help, but really the main aspect in which I look for intraday retracements, because these are lower probability move, and as I said, I'm looking to catch the daily expansion. That's my understanding. That's my model. So whenever I look at intraday retracements, it's really going to be during lunch. I'm looking for it to return to a discount of my most recent expansion. So I believe we saw that the other day. Probably last week. I can send an example in chat if you guys want something there for sure later down the line, because I don't want to spend 20 minutes, right? We've been in here for 48 minutes. I don't want to spend 20 minutes looking for an example in that case. But as I said, only looking for continuation opportunities when I have a time-based retracement I can frame. And then, of course, looking at for example, the same model, right? So breaker block, and let me zoom in actually so it's a little simpler. SMT, 1050 to 1110 macro. As I said, for an A+ setup, I'd need, actually that's the 11 a.m. candle. I thought this was it. So you actually have a beautiful open low, right? So you open, went a little bit higher, went lower. Once again, focus on the symmetry. We opened, went lower. That is open low. I can frame longs from this. And you have your breaker block right here. Definitely very nice. That is just a quick indicator I made to display my daily levels. There are custom times. It's key times. You can actually find it in my links, I believe, somewhere. I'll link it in chat if you guys want. And then, of course, once again, looking at breaker blocks, what do I look for? The first overlapping PD array. Look for a trade. Where's my stop loss? 3 PD array stop loss rule. And so that would be fair value gap here. You have the inversion fair value gap. Well, actually, before that inversion fair value gap, I'll have the fair value gap right here and the order block here. Since the order block is adjacent to a swing low, I'll use the swing low. Whenever my last PD array is a fair value gap, by the way, I use the extreme of the fair value gap candle. So in this case, the fair value gap candle will be this one, so I'll use the low a bit. But gives me a stop right here. Not the best of setups where I would be looking at recent liquidity and take this, but I would use my small breaker range deviations and my big, which is higher time frame. For example, this is probably a 5 or 15 minute breaker, and look if they align anywhere. Looks for that. Thanks for sending the indicator. I'm just looking at chat, trying to catch up, see if there were any questions. I don't see any. Awesome. But yes, I don't remember what your name was, what you're looking at, but in this case, you have a 15-minute point of interest here. You have your macro, which is a reversal macro, right? 1050 to 1110. You have your framework. I have no high probability objectives, really. So in this case, I'd probably be looking at the bread and butter setup of the big breaker. But let's say I go to a 5 minute and utilize, as you can see, this is a range that I just drew up on the lower time frame. It is the 5 minute breaker block. But you could also use, for example, perhaps there is a 15-minute breaker block. There is not. So in this case, I have intermediate time frame standard deviations and lower time frame standard deviations. No real high probability objective for my understanding in this case. So definitely wouldn't consider this trade, just due to the fact that if I'm not already long, it's because I missed my trade. And if I miss my trade and I'm looking for another trade, that is FOMO for me. And again, that is not something that I recommend for people necessarily. But if you are over trading and you are having issues with greed, definitely look to trade the least amount of time. So for me, if I miss that setup, right? So it is a setup. It is mechanical. That is a setup for my model. If I missed it, any other setups that are the same idea. So unless I'm framing a retracement lower, for example, any other setups that are the same idea is just FOMO trying to get into the trade too late when the actual mistake was not taking the trade earlier. New 4-hour inside 2 to 2.5 standard deviations. Definitely something. But yes, as showcased here, I would definitely only look to trade the first setup here. Wait for the green light. Came with that on the spot. There's probably a better way to say it, but sorry about that. Oh, voice is almost back to normal. That's lovely. SMT for me is really just I need to tick that box on my model list. And for me to have a trade, for me to have a framework, it goes all the way down from the daily chart where I get my bias, I get my narrative, down to my framework, which comes through time-based manipulation confirmed by SMT. Standard deviation alignment is definitely something I appreciate. I try to keep things simple, just because, as I said, if I have too many moving parts, it's definitely harder for me to go to. Appreciate that, JD. That's awesome. JDMJ trades. But yeah, it's just I could draw every single standard deviation. I could draw every single PD array. I know, and what I like the most actually as an analyst is the very complex study of order blocks. So not just regular order blocks, all of the order blocks and vacuum blocks, propulsion blocks, mitigation blocks. I am very passionate about studying this from ICT, definitely, but I don't use it to trade. So as I stated in the previous, starting of this call, I have two hats. I have my analyst hats, which I love to get statistics about every single ICT concept. I like to study every single ICT PD array, even when he's going to be at his 1,000 PD array, I'm still going to be studying it. But when it comes to trading, what do I use? I use unicorn, time-based manipulation, SMT, breaker block standard deviations. That's all I use. From this, that's the whole review of the morning, and we definitely went over a lot of concepts going through here, more than expected. It was very fun. Would you guys have any other questions? I'm glad to spend some more time going over my simplistic approach, or perhaps some other concepts that people might have issues with, or maybe too you'd like to add something.
I want to see if there's questions. I feel like everything was very clear, and I really like what was being talked about. So I personally don't have much to add, but it's just because it's very specific to your framework. So I feel a little bit out of place to add things.
Yeah.
Make it more complicated. You know me, Cold Brew and all these guys, we just have friggin' things everywhere. No, Cold Brew's asking questions about SMT, which is just insane because he just shits on SMT anytime that he can. But
oh, well, there you go. All right. Well, I understand your point of view, definitely, because this is not the peak of how you can be as an analyst. It is not the most precise you can be. And I've been diving into T-Trade's model as well with your indicator that you brought up. I removed it from my chart right now, but I have it not too far. Where is it? Fractal model. And I see how it aligns so many times with my setups, and it's actually starting to make me question some things. Looking at changes in the state of delivery, like you see right here, there you go. That was an entry, and you had that a little bit before. And right here, you didn't have one right on open, but you had the same understanding right on the, right on 8:30, so right on the news. So definitely some stuff that I'm going to be looking into. And just to answer,
it's scientist, this T is not really me, but I just coded it. But that's only
cool stuff. Mechanical approach, right? So always interesting from a coder's perspective. Yeah, just to answer Cold Brew's question very quickly, for me, SMT to be invalidated is not something that exists. So if there is divergence, I give it 1 or 2 minutes. So when I'm looking at the 1 minute chart, right, I give it 1 or 2 minutes until the candle closes. So I'm looking at 1 or 2 bars for it to invalidate it. And if it doesn't invalidate it, meaning if there's still divergence after those 1 or 2 bars, then the SMT is valid in my book. Once again, going back over, that's why I like to use breaker blocks, because I have time to see the SMT, time to see it respected before having an entry for my model. I like it to be slow in this case. And just to answer, I'm seeing a bunch of questions, so I'm just going to power through them. Turtle soup, I have nothing against it. Landres, it's just very specific. I do take turtle soup sometimes. I have some pretty old live trading videos on my YouTube channel that I actually trade the turtle soup. But for me, as I said, I am more consistent if I'm waiting for all my confirmations and I have time to truly analyze the framework. So it's just about taking it slow for me at the moment. I prefer consistency over returns. I'd like to circle back to SMT and asset preference. Can you go to November 12th and replay the AM session? You know what? Why not? I'll just look. Was there any questions? No. November 12th. Why specifically do you want me to go to November 12th? That's what I want to know. And I do need to go in replay mode. Why not? November 12th. No peaks, no valleys, just a system, a model, and peace. I try. See, it's very much easier to go at it calmly with hindsight. I'm going to be honest here. Because when I used to trade, I was actually looking at everything at once, and I would get overwhelmed. So it's just about correcting aggressively what I do, right? So I know my strengths and weaknesses as a trader. I know that I overtrade. I know that I am greedy. So what is the best way to get against that? Get a fully mechanical model that is simple and gives me a lot of time to review before having to take the trade. So that's all about it. Definitely. Who was asking for, what was it? November 12th. I saw a question in there. Mr. Black 2. Yes, sir. What do you want to see? You said, let's review this. So what is it that you wanted us to check on November 12th? Also ES. Yep, you have ES right here. They are aligned. And let's just say here, we'll just return right here. Talk to me. What do you want to see? Oh, I think I know right away. Okay, right here. What's up with the AM session? You want me to check the models I have? Well, here, let's look. I'm going to open my Forex Factory because, as I said, I need news to engage with price. That's just how I deal with things. So if I look at November 12th, 2024, let's go look at the news that whole week. So if I look at the news that whole week, November 12th, I have no high impact news events. That's not even a trading day for me. Do you value daily opens as a core basis of daily SMT? Yes, just random SMTs as a specific time. You don't trade without red news. I know I lost cold brew on that one. I do, but I have a very specific framework based on the red news. So I'm looking only to trade the weekly expansion, and within that weekly expansion, the daily expansion, which means that more often than that, I'm only trading on high impact news. For example, this week I traded yesterday as well, but I was half risk yesterday, full risk today, tomorrow as well, and I'm going to be half risk on Friday looking for a TGIF. So I just have a very specific profiling logic, and I adjust my risk and when I engage with price based on that. I'll find the, I have it on my Twitter. I shared actually how I interact with news in a thread, so I'll post that somewhere probably, or I'll link it in this video of the recording. Why not? I've been talking about it for a while, so definitely something there. But for a day like this, by the way, Mr. Black, I just want to say that I'm not even engaging with price. So just for me to follow my rules, I'm not looking at the chart. And why I'm not engaging with price, if I just, here, let me bring these news, is because there was a bank holiday on Monday. And no matter what, I won't trade, well, unless it's CPI or NFP, I'm never trading the day after a bank holiday, even if there's any sort of other news. So as you can see right here, 11th bank holiday, 12th, I don't care about these orange news specifically. I look at orange news as injections of volatility that will just help distribution. So definitely right there, I would wait until CPI. I would wait until the day after Wednesday. Does that make sense? Mm. Hopefully it does. I have a very, very specific way to look at news, and it's all about how I'm going to anticipate an injection of volatility relating to that news. So I'm going to look to engage right after that news, once it has the liquidity to be trading. I was looking for an example of asset preference based on SMT and was looking at this. So you see the stronger asset. So if you're trying to short, you're going to concentrate on the weaker asset, which would be the S&P in the picture that you sent, actually. No, I definitely get what you mean. Just for the other people, I'm just going to steal your picture very quickly for the recording so they understand, right? Here, your SMT tells you that the weaker asset is the S&P. Personally, I like to look at higher time frame SMT when I'm going to be taking conclusions about strength, because if I'm looking to catch the daily expansion, this is a long-term move. So I'm going to look for long-term time frame to tell me which one is stronger or weaker. But the only time I trade ES is when I see NASDAQ consolidate on New York Open. And then I'm waiting for ES to give me clear structure to then take the trade. And it takes more, since ES trades slower, it takes more for ES to break out of that consolidation. So it's just easier for me to filter. You have a checklist you could share. Well, for me, my checklist are my pictures. So let me actually bring one back. We had a long today. Let's bring back the one for the longs. I'll definitely share those somewhere. Copy. Let's bring that. Let's actually put that on the right. So for me, my checklist is right here. But actually, I'm just thinking about it. This picture doesn't have SMT in it. So you know what? Let's make a checklist, all right? So take your notepad. If you want to know about my model, right? Take your notepad, and we're going to go for it. Step one is very, very simple. It is going to be a daily bias. So I'm never going to be trading without a daily bias. How do I establish my daily bias, right? This is what we went through. Definitely revisit the start of this video about higher time frame premium and discount inefficiencies, and of course SMT. That is step one. Step two, I'm looking for framework. So what is a framework? I need high impact news, and I need a time-based manipulation, which means I'm looking for a fake move at a specific time. Now, this can be 10 a.m. open, for example, right? The open of a 4-hour candle. This can be during a macro, or this can be at the opening of a session. These three things, or of course, at a news event. These are what I'm looking for. I'm looking for time-based manipulation, which is a move in the opposite direction of my daily bias. And then I'm confirming that move with SMT. That SMT does not have to be recent SMT. I prefer it, but it's not a rule. It could be there is currently 4-hour SMT. Good enough, right? Just like we had, for example, here. Did we take that out on? Okay, so definitely some big SMT here, right? What we were looking at initially on these two assets. So no matter the time frame, I'm looking for it. Once I have my daily bias, I have my time-based manipulation. And it's very simple. I'm waiting for a breaker to form and taking the first unicorn to it, 3PD array stop loss rule. I don't pick and choose. I just take the first retracement into a unicorn. As I said initially, I'm looking for 5 handles. So breaker block plus or minus 5 handles to look at the range where I'm going to be looking for an inefficiency. So I'm looking for an inefficiency here, for example. And let's do this. I'm looking for an inefficiency here. I'm entering on it. 3PD array stop loss rule. For my take profits, that's where the picture will come in very helpful. For my take profits, I'm looking at my most recent opposite range, which is 5 or 15-minute chart. And I'm looking at the first premium inefficiency if I'm going long, first discount if I'm going short. Maybe I can just flip that. No, it's not going to change anything. So I'll actually bring the other picture in just to be very clear on that end. And if we go here, if I'm looking to short, I'm going to be looking at the first discount inefficiency in that 5 or 15-minute time frame. And that's going to be my partial. Then final objective, at least 75% of the position taken out at this point. And then just leave the runner, let your runner run, right? I like to trail my stop loss as at the first discount inefficiency of my range, specifically. Yeah, see, that's the thing, Colbert. I appreciate that. It is mechanical, but you do have a lot of steps to understanding it, right? So that's why I tend to not want to say mechanical too often, because when I say mechanical, people expect, okay, well, EMA cross there, you enter there, that's it, that's your take profit 2R, right? But for me, you do have a lot of understanding that needs to take place of daily and just intraday order flow to be able to frame trades like this. But once you have your framework, and that's where I use statistics as well. I use statistical frameworks for it, right? Along with one setup for life and stuff like that to build frameworks with that time-based manipulation. Once you go there, entering on a trade is very easy. And exiting on a trade is very easy as well. That's why I do pictures, to hopefully be like you guys. It's all about not giving up, Alga. As long as you don't give up, it's not a question of if, it's a question of when. All right, this is what we all say and we all want to believe. But once you actually believe that, you'll just go for it. You've got to bump it up. Definitely. That is great. When did you start learning trading? About 2 years ago, I started, sorry about that. About 2 years ago, I started trading crypto. I was doing NFTs in crypto. That's how I made my first money. Then I got drained, and my computer actually got hacked. They got all my info and took all my money. So then I went to Forex trading, which I got funded on my Forex funds, and then that company rugged. So now I'm in futures, and I'm going with good companies like Top Step, for example, to get funded. And actually this year I'll be moving away from funded as much as I can and trying to perform on a live account, which I've been working on these last 2 months. So that's what I'm going to be working on this year. Thank you, Colbert. Slowly but surely building wealth, you know? It's all about not giving up, just continuing no matter what happens, right? Appreciate that, Colbert, definitely. 2 years is very impressive. Well, you know, some people have easier times at it. And for me, I had a very supportive family that did not mind me dropping out of school and going full time. And you say 2 years, but I was spending 16 to 20 hours a day on this. I don't sleep much, so I was taking a lot of time. Colin, here in Quebec, we actually have primary school, which is year 1 to 6. Then we have high school, which is another year 1 to 5. And then you have CEGEPs, which is absolutely fucking useless for 2 years. You can also do it in like 3 or 4, and then you have university. So CEGEP is something that is useless. It is not similar to college. Here, university is pretty much what you guys have in college. But just in high school in general, I had a pretty weird life there. I got kicked out, then switched to another school for my last year of high school. This just brought me to a realization of I gotta wake up, right? I need to stop messing around. So I came to just looking online at how I can make money, pretty much, and that's how I started crypto and stuff. So right when I started CEGEP, I lasted 3 days, got out of there, and my plan was that I have until I'm 21 years old, because once you're 21, you don't have to go to CEGEP. Even if whether you went or did not go, you can go straight to university. So my plan was, I'm going to do this until I'm 21. If it doesn't work out at 21, I'm just going to go to university. And that lasted for about 3 months before I said, fuck this, I'm doing this for the rest of my life. So, yeah. Yeah, French Canadians, even worse, Colbert. You're not ready for it. But yes, so drop out of school, and I've been telling my friends to drop out of school. I got one, all right? I got one. Definitely. Do you want to add anything to that too? Because I'm pretty much done on my end, unless there are any other questions. Yes, I do speak French. But I'm pretty much done here. We reviewed the full day's PA, right?
I mean, nothing to add. What you're saying about at the end, I feel like a lot of us have the same type of journey. But when you're saying I'm trying to make my friends quit school, I've lost that battle so many times. But it just made me realize that everyone has their own path. So you want to bring everyone on board. Sometimes it's tough, but everyone has a different journey as well. I got like really, really hurt and really stuck and tried to do that for ages.
No, definitely. Yeah, I got through that same realization when I tried with 2 or 3 of my friends, actually, when they were on break. We tried doing it, and you can't force someone to want this for themselves, because it is a hell of a grind. So it needs to come from within. But I'm glad I could influence one of my friends, 2 of my friends actually, to get started. I don't know if they're in here right now, but Jordan and Julian, and they are doing really amazing. So definitely something cool there that I have some friends I can share this with, right? Because trading is a lonely path.
Oh yeah, it is.
And as No Setup, No Trade said, not for the weak. Definitely. All right. Well, on that note, I'm definitely tired. As I said, I'm sick. I'm going to go for a nap here. So I wish you all the best.
Appreciate you being here. Great stream. Thank you, everyone, for being here. Kane just jumped on to rambling about his P&Ls. Here it is.
Oh, there it is. Beautiful. Beautiful. Thank you for all the great words, guys.
Much love to everyone here, Nani, Colin, all the family, everyone who tuned in. Appreciate every one of you.
Yes, sir. Thank you all for being here. Thanks for all the kind words at the end. Definitely appreciate that. And just as a reminder, this will be recorded. I'll send the link to you guys too, so you can post it whenever where you have it. And you guys,
it will be in the live stream database, you guys.
Awesome. Well, you guys have a great day. Thanks for having me on too. Definitely awesome tools we have here. So I'm glad I'm able to showcase how I use them today.
Pleasure was mine.
Awesome.
Much love, everyone.
Have a great day, guys. Bye.
Ciao.